SoFi, one of your darlings. The stock soared yesterday after reporting yet another excellent quarter. That's two blockbuster quarters in a row now. And I know you're excited about the student loan moratorium ending in 2023 and giving the business even more firepower. So, question is, how should we think about SoFi stock going into the next year?
I think people should think very bullishly on SoFi stock going into the next year. As you guys know, I've been a long-term bull on SoFi. It's one of my favorite long-term investments. I think it is the Amazon of finance. They're creating an all-in-one super app for finance that younger consumers, millennial Gen Zs, really gravitate towards. Their suite of products is excellent and second to none, in my opinion. It's the only app in the world where I can have a checking account, a savings account, invest in crypto, invest in stocks, have a credit card, debit card attached to all that, and learn about stuff through their educational content and set budgets for myself and do auto savings and also earn great rewards on all my spending. It's the only app I know of in existence in the world today that can do all of that, from the palm of your hand. And I don't have to jump between apps, open different windows, go to different places, have different logins. No, it's just one place to do all of that. It's great. It's absolutely fantastic. I love it. Everybody that I've shown to the product that has been onboarded and has come onto the product loves it as well. I think it's a fantastic product. And one of my core investment tenets is invest in great businesses that build great products, because a lot of people will use great products. And if a lot of people use great products, a great business will figure out how to monetize that great product. And that's exactly what SoFi is doing. So I am blown away by their excellent growth in this environment. And one of the things that I look at when investing in companies is not just, okay, you grew revenues 50% year over year. Congratulations. But I need context to that. What did you grow revenues by last quarter or the quarter before that? I like to look at what I call what is known as a derivative of your growth. So I'm trying to look at your growth velocity. Where is your growth trending? Are you losing velocity? Are you gaining velocity? I just want to look at your raw growth. Tell me what the trend is. When I look at SoFi, the trend is so positive. If you just look at the recent quarter, look at member growth. They grew members by 61% year over year in the third quarter of 2022. It's this most recent quarter. The quarter before that, 69%. Quarter before that, 70%, 87%. So yes, they're losing some velocity, but I mean, those are some pretty good growth rates. 87, 70, 69, 61. They're not slowing all that much. That's fantastic growth. And you look at the raw numbers. 408,000 new members, 450,000 members, 424,000 new members. So they're consistently adding more than 400,000 new members every single quarter. That's amazing. That's really strong growth. No other bank out there, no other financial app out there is growing that quickly. So that speaks to, people are gravitating towards the SoFi application. You look at product growth, look at the derivative there. 105%, 84%, 79%, 69% in the most recent quarter. So again, a slowing, which is natural, but it remains very vigorous. 69% year over year growth in products last quarter. Fantastic. Galileo accounts, 58%, 48%, 40%. So what I'm saying is that across all of their KPIs, the key performance indicators, the growth velocity is exceptionally impressive just by itself, but very much so considering the context of the economy, considering we are in a slowing economy, considering interest rates are going higher, considering consumer spending, while resilient, is definitely slowing, considering consumer confidence is low, considering the labor market is getting a little bit tighter. When you look at that, you would expect a brand new financial application, financial service provider like SoFi to get hit pretty hard. And that's why the stock has been hit pretty hard. But the numbers aren't getting hit hard. The numbers are showing a business that continues to fire on all cylinders. And then to your point, student loan moratorium. This was a company that made its killing, defined itself as a student loan refinancing platform. That business has essentially dried up for the past 18 months, 24 months because of the student loan moratorium. That moratorium is ending in 2023. So one of SoFi's most powerful growth catalysts comes back into the pipeline in 2 months. And the company's already firing on all cylinders in an environment where it shouldn't be firing on all cylinders. So come 2023, maybe the macro environment improves and they get the student loan business backfiring on all cylinders as well, that this is a company that could go absolutely blockbuster next year. And the stock price is significantly undervalued to a point where if the company does gain growth velocity in 2023, the stock should explode higher. $5 yesterday, $6 today. It's easy to see this as a $20, $25, $30 stock in 12 months under the circumstances I just laid out, which I think is very, very possible. So I am very bullish on SoFi going into 2023. I'm very bullish on SoFi going into the end of the year. I think SoFi $5-6 is one of the best investment opportunities I've ever seen in my career. So long SoFi, bullish SoFi, let it be known. I'll pound on the table, scream from the rooftops. That's how I feel.
So that's SoFi going into next year. But what about the 5-10 year outlook for SoFi when you talk about how SoFi is the Amazon of finance right now? I think about Amazon. Amazon really was the first of its kind when it comes to online retail. The concept of online banking, that's not new. SoFi is just the one kind of collating all these different things into one platform. What happens when other banks kind of catch up with SoFi, start adding those features to their online banking systems? Does SoFi last 5 years, 10 years out?
Right. Well, Amazon actually wasn't the first e-commerce. There were a lot of companies that were before Amazon to e-commerce. Boo.com is one that comes to mind. There were a lot. So Amazon wasn't first. Amazon became king because Amazon was built religiously on the belief that the customer is king. That Jeff Bezos understood intimately that if I'm going to beat everybody in retail, I need to create a product that is second to none for the consumer. Screw my profit margin, screw my business. I will build something that eats my profit margins, eats all that, so long as it delivers a super cheap, super convenient, super accessible product to the customer. Knowing that if his product does that, then a lot of people will use it and he can benefit from economies of scale and Amazon can become profitable at scale. That's exactly what happened. So I see SoFi doing the exact same thing. It's the same playbook. SoFi is eliminating fees, giving 3% cash back on credit cards. They're doing everything possible to make the most convenient, cheapest, lowest cost, easiest access financial product in existence. So they're beating all the other banks at that today. And I think that's where the Amazon analogy comes in. It's like, okay, so Amazon wasn't first, but Amazon made it best for the customer. SoFi wasn't first, but SoFi has made banking best for the customer. Again, what other app in existence allows you to have a checking, savings account, credit and debit account, a credit card and debit card attached to those, invest in cryptos, invest in stocks, learn about all the tools that you're using, financial education, have Relay, which is their budgeting software, and earn significant rewards on your spend. There's no other app in existence that does that. All for no fees, essentially, with a great rewards program on their credit card. So like it just, the perks are unreal. And the perks keep getting bigger and bigger and bigger. I'm getting emails every week, it seems, about something new's happening. As we're upping this reward, we're reducing this fee. So they continue to build a product that is second to none for the customer. And as a result, they're going to get a lot of customers. And once they get a lot of customers, they can leverage economies of scale to become a massively profitable business. Now, to be clear, the company is already profitable on an adjusted EBITDA basis, but their profits are going to soar over the next 5 to 10 years thanks to economies of scale, which is a result of building a product that is second to none for the customer. So that's why I really like SoFi. What happens when the other online banks come on? Well, what happened when Macy's tried to digitize? What happened when Nordstrom tried to digitize? What happened when JCPenney tried to digitize? What happened when Sears tried to digitize? What happened when Walmart tried to digitize? Yeah, they had some success, absolutely. But by that time in the game, Amazon had reached escape velocity, right? Amazon had already built a distribution network. Amazon developed a reputation as the online shopping store. It was able to leverage economies of scale to deliver even more cost-saving benefits. Because that's another thing, right? If Amazon sells more products, and that means it can actually reduce prices a little bit on the products it sells because it's leveraging economies of scale. SoFi is going to be the same. The bigger it gets, presumably, the cheaper its products can be, the lower its fees can be, the better its perks can be, the better its rewards programs can be. So the bigger SoFi gets, the bigger its competitive moat gets as well. And the more differentiated it becomes from, a Wells Fargo online banking or a Bank of America online banking or any of those incumbents trying to digitize. So in the same way that Amazon defended itself through network effects and economies of scale from Nordstrom and Macy's digitizing and taking their pie, I think SoFi does the exact same with Wells Fargo, Bank of America, et cetera, et cetera. And that's why I'm really bullish on them in a 5 to 10 year outlook. In a 5 to 10 year outlook, I think they will be a bank that is larger than Wells Fargo and Bank of America. I really do. From a consumer banking perspective, they don't do any of the other stuff. But from a consumer banking perspective, I think they will be bigger than both of those. And I am a proud. Don't have my wallet on, but I would pull it out. I love to pull it out. I would pull out my SoFi card, but I'm a proud user, proud customer. And the old adage, only invest in what you know. Well, I know SoFi very, very well, and I'm very confident in the business, very confident in the people running it. They have a bunch of really smart people running it. And then that's actually another thing I want to talk about is the final competitive advantage for SoFi is just the talent. Banks were built as banks. They were built with financial people. Wells Fargo gets economics majors, finance majors. They don't get many CS majors. Bank of America, they get finance majors, economics majors, business majors. They don't get many CS majors, computer science majors. SoFi is built as a tech company. SoFi is not built as a bank company. It's got tech woven into its DNA. So they have a lot of computer science folks on staff, a lot of computer science folks. And let's say I'm, this great software engineer coming out of Stanford, Caltech, MIT, Berkeley, wherever it may be. Do I want to go work for SoFi, up and coming disruptor, super fast growth, could be the next big thing. Its stock could be worth a lot in the future. Or do I want to go work for Bank of America or Wells Fargo? The choice is pretty crystal clear. And the disruptive minds, the innovative minds, the very forward-thinking people, the very talented people are going to want to go work for SoFi over legacy banks. And that is another thing, another advantage that's going to allow SoFi to essentially rewrite the rules of this industry. As you can tell, I'm very bullish on SoFi stock, but we can move on. I want to say that $5, $6 at SoFi stock is an absolute steal.
Thanks for watching HGI Clips. For the full episode, head on over to our sister channel at Hypergrowth Investing by clicking the link in the description or listen to the podcast on any of your favorite streaming platforms. We make new episodes every Wednesday, so make sure to check it out and subscribe to never miss any of Luke's Hypergrowth insights.